Broader market themes. We're joined by our Markets Live executive editor, Mark Cudmore. Mark, we're deep into earnings season here in Europe. The futures look kind of mixed for Europe. US futures point tentatively higher. Overlying all of the earnings stories, we have a little bit of movement on tariffs. Where's overall sentiment, do you think, right now for risk assets?
We're in a holding pattern. Good morning, Anna. I think a lot of people are very excited, not only by those big earnings, but of course we have a lot of macro data this week. Wednesday data is the one that a lot of people are talking about. We obviously get GDP and we get a whole kind of slew of kind of higher frequency indicators as well. But most of the readings we're going to get in the next kind of 36, 48 hours are in fact from March or from the first quarter, and therefore less relevant because they're before the reciprocal tariffs were announced. I think what's probably the more interesting data is the stuff we get on Friday, which the ISM reading will be very, very important there. I think it is still the survey data, the soft data, that we're having to take the lead on. I know that everyone, highlights that in COVID, the soft data and the hard data never reconverged, and the soft data is misleading. I'm not sure that's necessarily going to be the case this time around. And I think it is. So the soft data is what we're getting at the moment because the hard data for April is not yet coming through. Now, one final point in the data is a lot of people are very excited by the jobs data on Friday. Claims have not shown any cracks yet, and I don't understand why people expect NFP to show a material dip when we haven't seen any sign of weakness in the claims data. I think we won't see the jobs market materially weaken until mid-May at least. So I think we're some way off that. So people in a holding pattern, people are getting excited about Wednesday's data, but it's really Friday's ISM that's most important this week, and of course earnings.
Mark, a lot of people are getting excited, though, that we have had 100 days of the Trump presidency, and therefore big announcements are coming, and we are going to get some deals done with foreign nations, and we are going to get maybe some subtle changes when it comes to the tariff story, and this is all going to be taken very optimistically. Are we getting ahead of ourselves in terms of our expectations around what we're going to see?
I'm worried we are, but, what I'm most worried about is that the optimism still seems to build day by day, because as we get closer and closer, we get another headline from Trump promising a deal soon, and people kind of pricing a little bit more optimism, and people are getting very excited about these deals. I think we are going to get some trade deal announced soon. It seems like the earliest ones will come from Asia. India, South Korea, Japan are some of the contenders in there at the forefront of this, and people are getting excited by that. I am worried that, look, real trade deals take months, if not years, to negotiate. I'm worried that anything that gets announced now will ultimately disappoint in the concrete details. So I think as we get, more optimism priced in, and as we get close to that trade announcement, that in fact we then tee ourselves up to an asymmetric reaction of disappointment after the headline, and people realise, hey, this is nothing substantial. The overall backdrop at the moment is that we're expecting marginally positive news flow from earnings, from the kind of trade deal announcements, from the data, which won't yet have slowed down, and yet the backdrop is a structurally weakening global economy, and that makes it very hard to trade positive marginal short-term news against bad long-term news.